Hey everyone, welcome to the weekly review. So last week I was away. Let's look at what happened. Uh, had a feeble attempt to go lower, which got bought out at 565, and we bounced on Friday due to the NFP and unemployment data. This week we have another CPI print and PPI. Nothing really that interesting, or FOMC minutes, I guess, but that's kind of it from the US part. And I mapped out August levels. This is August mid, sorry, not August, September. So September level, September low, September mid, September high, which is the same as the Q3 high. Quarterly levels, Q3 mid, Q3 low, and obviously the high. And another important level is where we opened this quarter, the quarter high here in orange. Long story short, these are the most important levels we can have for the next month or so. And this is going to be where we are drawn to and where we bounce. So first, shallow, we have a couple of scenarios with shallow pullback, medium pullback, and hard pullback. Shallow pullback is this is going to be the target, like 557. If we get a medium pullback, this is going to be the target between Q3 mid and September low, like 540 to 5 slowly below 540. This is going to be the target. And if we get a big ass pullback, the Q3 low is going to be the target. And short term, basically, while we are below the quarter open, we are bearish, or let's say not bullish. If we are above the quarter open, we can expect to go higher in the market. So far, we're getting rejected, and we are below the quarter open. So I would expect that we get continuation down. Another interesting setup, let's call it, is that uh, these levels are basically doubles. So for example, it's obvious, yeah. So if we are in this horizontal range here, if we double this range, means if we get a breakdown below, we double the range, and this is almost exactly the September mid. And uh, if we get this, let's say, sideways range like this, and we double it, we go to this. This is pretty straightforward because it's the high, the mid, and the low. We go to get this as a target. And we also have a trend line here. Let's just draw it like this. Basically, if we go here, it will be a trend line break, and obviously we would go lower, and potentially, like, let's make this a channel. Let's say this was the top, and now we make this the mid. If this were to become a channel and we get like sort of a slow drop with a low round OPEX, this is OPEX, this is the CPI print. If we get a low round OPEX, it would be right around here. So it all kind of makes sense and adds up to uh, what uh, uh, what we have drawn here with the levels from September and the quarterly. Now, I do think we will get either the shallow pullback, meaning September mid here, or this one here, like 555. Let's go be exactly the midpoint, but 540 should be like the maximum we see as a downside, unless we get like a horrible CPI print. But other than that, I think it's going to be bullish. I had a video earlier with individual names, and I'm going to reference that a bit. In that, I don't think the index will go up significantly, but the individual names will go up significantly. There's going to be more like dispersion. Some things go up, some things go down. But overall, the market will just slowly grind up I don't know, something like 2020, something like this. And we had this small day kind of small ball market grind up. How much did we go up here? Went up 10%, but I think the biggest day was like below 1%, something like this. And this is the kind of move I expect we get moving forward as well, like this kind of thing here, like minus 12, plus 59, plus 36, plus 0.20, plus 0.05, plus zero point zero 0.08, and we'll get this kind of days moving forward if we go up. Obviously, when economic data comes up, I think it's possible that we get even bigger moves up. But more or less, the way the market will go up into year end is going to be something like very slow, methodical, some pullbacks as well, then go up. So very, very, very slow. But individual names can go up a lot or go down a lot, regardless of what happens here. For now, while the market is not above the quarter open, then we are bearish. If the market is not at a pivot, then we are bearish. So assume that any move up will get rejected. Look at this. We on Friday we almost hit the quarter open. We didn't quite tag it, but we got rejected at it, and now we're going down. VIX 10% up, which is a kind of an overfix move as well. But I still kind of expect that we will go down into election, and then we have a swift recovery after that, and we continue going higher into year end. Because uh, I kept saying a couple of weeks back that for us to actually go down in a significant way, we need bad news. On Friday, we didn't get bad news. If CPI isn't bad news either, then what's the reason for the market to go down? We actually need bad economic news for the market to go down. Until that happens, good news is good news, and the market will just grind higher over time after consolidation and stuff like that. Same way that when we go down, we just double these ranges and we get our targets. Same thing applies above. So if we break out here, then our target will be 584. If we move this, target is 592, and so on and so on. So that's kind of the setup we are in. Uh, it's not one to play the market that aggressively because I think it's going to be very choppy, like this, this, and eventually what this type of move. Uh, so a very choppy market, which is hard to play, and some occasional surges, but most likely support will hold. This is more or less supported by positioning. This is positioning until uh, October OPEX, and we have like 560. We have a pivot. Uh, Between 560 and 555, I think we have 50%, and we can bounce basically at any point around here. We have 550 as a huge level, which I don't think we break. And because we don't break 550, I don't even think we get down to it. So my target would be September mid 557, basically between 555 and 560. So because the September midpoint is 557, I think that's going to be the target. SPX kind of looks similar. 570, 565, and 560. So we get to the 50% point around 555. So same thing, I kind of think we get a support around here in this area, given that 555 is also the 50% threshold on positioning. I don't think we go below that one. So yeah, that's kind of it for the market. Don't don't really play anything that aggressive. I will only be making small plays like 1k, 2k options positioning on individual names. I don't plan on playing the market at all unless we get to target. Maybe I'll get some calls for uh, getting back to 575 and even higher later in the year. Uh, yeah, no really bearish or bullish conviction aside from the individual names I posted in the other video. For now, I honestly don't know. These chop scenarios are very difficult to assess. I think we will get a tag of the trend line eventually. Let me turn back on the daily levels. So this is beginning of day today, end of day today, post market, beginning of day tomorrow, and beginning of day end of day tomorrow. Yeah, I just don't see us dropping that much. 570 should act as support, let's say. Then we bounce up again. I basically see us chopping. Maybe we go down until CPI. CPI is here on Thursday at 9:40 in the morning Pacific time, and maybe then we get a direction and we either dump or go up. And again, once we recapture the quarter open, this becomes bullish. Target is 584. I'll just move it higher. 584, something like this. If we get there, and I don't really expect to um, get there in a single move per se, because moves up will be more muted than moves down. If we get a move down from CPI, I think we can get to this in a single move, like in that same day. If we were to go to 540, we would get to 540 very quickly, like in a couple of days, but I don't think that's gonna be likely. If we move up, it's just a matter of conquering the pivot. If we conquer the quarter open, things will slowly become more bullish and we will get to 584 over time, over a couple of days. And that's kind of it. Okay, yeah, that's it for today. Have a good one. Bye bye.